incredible individuals, so I've been excited to end the session with this panel. And let's
thank you everyone for being here. One of the things that I want to start by saying is that on the industrial panel, one of the key elements that they say what should you do if you're a commercial broker, they talk about education and learning. And I think one of the best venues to learn and to be educated is CCIM. Not because I am a CCIM, I'm saying it, is because of what you're gonna hear today. We have a lot of CCIMs in the group right here today. I'm gonna try to introduce them, and this is gonna be a little bit different to what you hear because they come from different backgrounds and they do different things, and they do mainly investment. So we're gonna have Sandra, Ron, and Ed. What I wanted to do is for them to start by saying who they are pretty much and what do they do, and from there we're gonna take it. So we're gonna start with Sandra.
My name is Sandra Goldstein. My company is Sandra Goldstein Commercial Real Estate. I've been in the real estate market for 40 years. I've never seen a market like we're experiencing today, and I'm anxious to talk to you about it and find out some information and their take from my fellow panelists. I've been a CCIM, I'm proud to say, since 1984, and I just got my lifetime certificate. I don't know if that encourages me to retire or not, but that's not going to happen. I have dealt in environmentally contaminated properties. I've emphasized lately looking for charter school sites, and I do deal in site assemblages. I've also handled investment properties, so I've had a varied real estate career. And generally, my buyer is the one who leads me in a direction that he wants to go. Ron?
Hi, I'm Ron Coan. I'm president of Coan Commercial Real Estate. I'm a real estate broker when it's Coan Commercial Real Estate. I have a lending company. We do hard asset lending, and I'm an investor. And my niche in particular is I've been doing this 20 years, and I found the east side of Miami very early when everyone from Miami Beach was driving over the highways to get to Doral. I was starting to really work that area. I was very early in Wynwood, Little River, Edgewater, Allapattah, and I still work. My whole practice is really between Lejeune Road and Biscayne Boulevard. And following up a little bit on what Jose said about CCIM, this week they're doing the 101 class. In fact, I think today is the last day of class. I can tell you that it was the single best class I ever took in real estate. I was a child of the 60s and majored in history, English, and Revolution. And when I took the CCIM class, it was all about money. And it was about the present value of money against the future cash flow. And it gave me a whole new way to look at things, and it was like a bell went off for me. And it really has helped me along with 102, 3, and 4. And I became CCIM in 2000, and I accelerated it because the final part was in San Francisco, and I wanted to go there. So
you should have bought there.
I should have bought there, but my real estate career is a lot of should-haves and could-haves and would-haves, but whatever. At any rate, right now I'm very active in Allapattah as an investor and in Little River, and that's kind of where my focus is. And I still do a lot of industrial brokerage in the East Airport market.
Hi, my name's Ed Schmidt. I'm with NAI Miami. We're a full-service commercial real estate firm. I particularly do investment sales. I did a lot of workouts in the last 6-7 years. That has dried up. I think something might be coming in the next few years. But we also do development. We've done shopping centers, developed shopping centers, developed mini storage, and also converted to office condos. So I've done a lot. I will agree that the CCIM gave me a lot of information. I've been doing this for 30 years, and when I took the CCIM, I learned so much more that I didn't know. And it's really helped me in the investment and learning about buying property, investing property, and helping my clients understand commercial property.
Directly the conversation directly to Sandra. Let's talk about some of the deals on land. What's going on with land? What's happening? Who are the buyers in the market? And let's talk also briefly about the brownfields and try to tell them what brownfields are, which we talk about in the industrial panel also a little bit.
How much time do I have?
Very little.
Okay, well, let me start with some of the significant land transactions that happened this year, but I'm not going to touch on the neighborhood areas like Wynwood and Design District because I'm going to leave that to Ron. But there are other transactions that have been made that are really significant. And in studying over the 360 land transactions or properties that were repurposed and sold on the basis of land over the last year, I found that land values for both entitled and unentitled land ran from $10 a square foot in the Miami Lakes area to $3,000 a square foot in the Design District. There is no way anymore to equate these properties to a particular standard for valuating properties, and beauty is in the eyes of the beholder. For example, in just the beginning of this year, Betty Dunn, who owned with her husband a long-time 200-acre tract of property, who had many buyers and many requests for buyers over the years, finally sold a quarry and a lake that was about 150 to 200 acres of property for $129 million. And the buyer was Lennar. And this property is already zoned for multifamily for over 2,000 units. And what did Lennar pay for this property? They paid, on average, because it took part in two different parcels, $10 a square foot. So compare this with another transaction, or three transactions that took place in April of this year, and a partnership was created between Lennar and Codina for a golf course site of about 129 acres, and that sold for $96 million. That property was already zoned for 2,800 units, and whether or not that zoning is going to be in place or whether they go in for a rezoning, I still don't know the answer to that. But in any event, that property sold on the basis of $17 a square foot. In Coral Gables, in the first quarter of this year, the Holiday Inn site, which is on 2.5 acres in Coral Gables at 1350 South Dixie Highway, sold for $44 million, which came to $450 a square foot. That's a building that was in existence for over 50 years, and now it's being repurposed for a multifamily mixed-use site. And there are all kinds of examples. And one person that I really like to follow is Moshe Manna, who over the past, since 2010, as far as I can recollect, has been buying up properties. Currently, he owns about, as far as I know, about 78 properties for a retail price then worth about $450 million. In the past year and a half, he put together an assemblage of about 27 different properties for about $250 million. What his plans are, really we don't know, but he's creating an area of mass construction, the details of which will come to us sooner or later. So there are all kinds of assemblages, and they're being done on properties in creative ways. Land is being repurposed. So properties that were formerly gas stations or landfills or trailer parks, gas stations, are now being reutilized and recategorized in different ways. And the beauty is in the eyes of the beholder. So
thank you, Sandra.
Stay tuned.
Because I know Ron, I know I can throw him a curveball very easily. I want in your bio you wrote something very interesting, which is creating communities. So I'm going to open it to you to talk to us about creating communities and on the whole.
Well, I think the first place that I really saw it was in Wynwood. What I saw was an opportunity, first of all, back in 1996, that number one, I didn't want to keep driving west. The traffic was terrible, and it was at a time where the institutions were coming in and buying up a lot of the warehouses back then, and I really couldn't compete with them. And so day after day, I was cold calling as a broker, but really looking at it as an owner, and it was getting frustrating. And I was picking up some business as a broker, but really one day I had an epiphany. And the epiphany was, we're out of land. You just can't keep going west, it's crazy. So where is it good? Well, waterfront is good. And at that time in 1996, 97, starting at around 17th Street, just north of the Omni, and running all the way up to 82nd, it was nothing going on really on the waterfront. And I drove over there, and there were crack addicts, and there were prostitutes, and they're selling whatever they're selling, and and I realized, and I live in Coconut Grove, these people have a better view than me, and they're sleeping on the bench. This has to change. So I got all excited. I called all my friends, and I said, we're going to pool money, we're going to buy this, we're going to buy that, and they looked at me like I was just nuts and completely off the wall. But I stood up at CIASF meetings, and I was picking up listings in Little River. I was selling buildings for $10 a foot. And people laughed. Who would want to be there? And 5 years later, we were starting to sell them at 75 to 100. And I didn't have enough money to do everything I wanted to do, but I started to broker, which gave me the basic information and was a great window into insight. And then I started to buy slowly. I started buying some small things. But it wasn't really until I met with Tony Goldman, and who we never really partnered with or did any work together, but Tony had a vision. I was just buying property because it was really cheap and I could rent it at a reasonable rate and I could make money as I was going along. He had an overall vision, and in particular in Wynwood, if you looked at the streets from 20th to 29th, and you were Miami Avenue over to I-95, it was a blank canvas. The businesses that were there, it was the fashion district. It was a lot of apparel guys who had been going out of business, and there was almost no residential in there. It was all in small industrial buildings. And it was a grid setup, it was easy access. He came over and said, oh, this is great. We're gonna fix up these buildings and we're gonna bring in restaurants and we're gonna bring in traffic. And he began to organize art shows, and we had a lot of incredible discussions. And my real insight came when I went down to Argentina when I was in Buenos Aires in 2003. I found myself in an area called Soho Palermo, which I kept getting drawn to it every day. I kept going back after whatever we were doing in the city. And I realized after about the second or third day, this is Wynwood, but with trees. And it was small factory buildings that had been converted into small artisanal shops and restaurants and little parks on odd corners. And I realized that's the vision. That's it. The buildings need windows. They used to have windows in Wynwood. And then air conditioning, they got built before air conditioning was around, and then when air conditioning came in, the buildings got all closed up. Those buildings are being reopened again, not necessarily the same openings, but the windows are a face. They're a face to look out onto the street, but also to go in and see what's happening inside. And it creates a human scale. And once he came in, and there was David Lombardi, and there were others who came, Tony Cho now, created a sense of place where people could go and feel good. And that's part of what we've really been involved in. When you go to Little River and you start to buy, and I'm glad you asked this question. Little River is it's got an incredible location. There's a lot of causeways that lead over to the beach. It's easy to get to 95, great to get downtown, great to go north. But it's an area without an identity right now. And the prices in Wynwood have pushed a lot of people north, and the design district have pushed a lot of people north. But what is going to happen in that area? And there are challenges right now. For instance, in the city of Miami and the county, back in the 60s and 70s, identified an area from 60th Street really up to about almost 80th Street, 79th Street, on the west side of Northeast 2nd Avenue, and it's projects. It's going to be very hard to shape that neighborhood without coming up with some kind of solution that's going to involve governmental entity and private developers to allow to create housing for the people that are there, but also to create workforce housing. You can't just build $1,000 square foot condos. People who work for them and people who do the construction need to live somewhere and service the business. Cops, firemen, government workers, whatever it is, they need a place to live. And so the challenge there, and what we've been talking about amongst ourselves, is how do we go into these areas and rebuild and redevelop these things. And so there are models around the country, and I think that's one of the challenges. People have mentioned transportation, but once you've got to get more dense. But at the same time, you have to create places where people can live and work and play. And that's our challenge in terms of shaping the neighborhood.
Thank you, Ron. Ed, put ourselves more in what's going on and what's going to happen. How do you see the economy going in relation to the commercial real estate? Where are we? Are we growing? Are we in a stage of recession coming? How do you see it?
Well, I just want to also add to Ron's the affordable housing. I mean, I think that's that a lot of people are looking at right now. Most of the time you think affordable housing is going in low-income areas, but most of the affordable housing now and most of the incentives and most of the developers are looking in infill locations like a downtown or like even Coconut Grove. They did some affordable housing. And that is an important thing because everybody that works in the restaurants or hotels and everything, they have to live somewhere and they can't drive to Homestead every day to get there. As far as the entire economy, I'm sure you heard a lot of people say when Latin America sneezes, Miami gets a cold. And I think that's starting to happen. You have the dollar strengthening, so you have less investment. It makes it harder for somebody, for example, in Brazil who used to be able to come here and they think they get a bargain 5 years ago, and now it's costing them 150% of what it cost them 5 years ago. So I think there's cautiousness, but I think also in Latin America, a lot of people, because of the inflation, want to bring money here, even if they're losing money, at least they know it's a safe investment. So I think in the next 2 years, I think the market is leveling off. People are paying some big numbers for land development. Development for condos is slowing down. So I think there is still investment coming, but I think we're having some sort of a leveling off. I think by 2019, I think it's definitely going to be done. So if you have any properties now, I think now is the best time to sell it. And as brokers, I think you go to your clients and say, now is the time, because we're near the top, in my opinion.
What about you, Ron? What do you think? Sorry.
Amen. I also think we're near the top. I've sold my Wynwood portfolio. I sold it at prices that were records at the time that have been completely blown away. I didn't understand when they paid the prices they paid on my property how they were going to make money. And but they're double and triple now, even that. And I don't really understand that. It's the same with the design district. There was always a fundamental principle when we bought the property that you needed to make money almost from the get-go. You needed to make a small investment to get it going, and then once you had the cash flow, you could then figure out what you were going to do more long-term. They're buying properties, they're on a negative cash flow. The only way they can do is they got to go up. And I don't know that 8 stories will be enough at the prices that they paid.
What about you, Sandra?
Well, I'd like to add to that because I was very curious because a couple of years ago we saw there was a sale by Thor Equities, a New York development and investment company that bought some land on North Miami Avenue and 40th Street, and they paid a phenomenal price of $1,500 a square foot. And Doris Sutton, a colleague of ours, was the owner of that property, and she really did a land, it was incredible. We all congratulated her. Well, a few years later, Their Brooklyn buddies came in, Red Sky, and paid $3,000 a square foot, $3,100 a square foot, just recently for the same piece of land. So I thought to myself, how can this happen? How can anybody come out at $3,000 a square foot? So I called Neeson Kasdan, who is their attorney for Red Sky, and I said, Neeson, what is going on? I mean, what do you see that the rest of us don't see, and how can they afford? Well, first of all, it's a New York frame of mind. But secondly, they're not looking to develop in this cycle because they see the condo market, which has been fueling this growth for the last couple of years, probably coming to an ebb right now. And maybe there's enough inventory for the next couple of years. And then again, for sales maybe to 2019. They're looking for 2 cycles down the road, and they have the holding power to hold these properties for a 10-year or more window. And then again, they're not comparing prices with prices that have traditionally been paid in Miami. They're looking at it from a New York state of mind or a California state of mind where prices are 2 and 3 times what they are in Miami. That's the kind of vision and understanding and perception they're bringing here.
2 cycles down the road, 14 to 20 years? That's how the investment is.
10 to 14 years.
Now, on that same note, so where are we going? What's the asset that is going to really grow now? What would you invest on? I mean, if you're advising somebody, Ed said sell everything, but is there going to be growth in industrial like we saw in the industrial panel? Where is the money going to go to in Miami?
I think there's a lot of developers looking at transit-oriented development, by the Metro Rail stations where they're buying property, where they could hold on to it, maybe make, even no cash flow until the market changes. They are looking 2-3 times down the line. But I think a lot of them are looking that's where people want to be. They want to make it easy for them to get downtown or get, to their jobs on Brickell Avenue. And it could be in Coconut Grove by the Metro Rail station, or by Dadeland. 13th Floor Investment is investing a lot in that type of development. So I think that's a big piece of investment that people are looking at.
Ron?
So we're doing a lot of land this year in, let's call it 37th Avenue and East. And a lot of it with environmental issues. And a lot of it is local, but a lot of it is, for the first, I don't have a big REIT business. In fact, I can barely mention or know maybe 2 or 3 names. But I'm getting calls now. And I'm getting calls from these people looking, their business with internet providers has the internet providers looking for what they're calling the last mile. And they need to look for, not necessarily vacant land, but they're looking for old buildings near residential communities on the infill. And so it's another use. It's something that we're looking at very hard right now and trying to identify projects for them where there are existing tenants who can stay in for 2 to 5 years that they buy and then they re-entitle and then redevelop down the road. I think that's something that will happen.
Sandra?
I think in my experience, I find that buyers are looking for more creative ways in which to buy real estate. And these creative ways include a reuse of existing properties. And many times they have challenges environmentally, entitlement-wise, engineering-wise, and assemblage-wise. But as a result, there are payoffs that can be made in repurposing trailer parks, gas station sites, landfills. By way of example, my son Michael is a partner in a landfill project, which is at the gateway of the Palm Beach International Airport. For 70 years, that property had been utilized as a landfill. In fact, it was 30 feet high. But it was right at the gateway of Palm Beach International Airport and it was hiding in plain sight. And many people could not, bear the sight or the cost that would be associated. So this property then was designated as a brownfield site, and it cost many millions of dollars to cart away the hazardous material and to take it through regulatory channels. But as a result, Wawa has bought the corner piece of this property and will build in the next couple of years, and that property would probably eventually sell at around a 4 3/4 cap. A hotel flag is negotiating currently for a portion of this site. There is a contract for a public storage use, and there's an available retail site, all on a 10-acre site that was formerly a landfill. And so I think that developers and buyers are looking for, infill locations in which they can marshal their resources to create value where it didn't exist before. And this property, if it pans out according to the projections, will yield them probably 150 to 200% profit on their investment. But it takes a lot of courage and a lot of steel to transact something like this. But these are things, because the low-hanging fruit is either very expensive or it's non-existent. And so we have to look for creative ways in which to, in Dade County, we have a master plan, a comprehensive development master plan. There are 2,000 miles of land in Dade County, 5,000 of which are in the inner urban areas and are developed. So there's a lot of land here, but these land resources, according to the planners, are marshaled around urban centers because that's where the strategic resources are available and where it's away from our important resources like water, agricultural land, and the environment. So it's incumbent, and the planners are insisting that land be developed first in these urban centers so that we have the resources, we have the infrastructure, which will hopefully be expanded on, and these are the areas that we should be looking at.
Just to move in our conversation, there are two important factors that are going to happen in the next few months. Interest rates. How do you see the interest rate affecting our industry? Hey, anyone.
All right.
John.
I don't have a crystal ball. I don't know what the Fed is going to do in terms of that, but I don't see that inflation or even higher interest rates is really our issue. I think deflation is more of an issue right now. Negative interest rates are a reflection of an overcapacity of labor and production. And if you look worldwide, people can manufacture almost anything, anywhere. And there are people to provide that labor and means of production. I mean, steel is just way overdone. Commodities have been beaten down heavily. I see that. I don't see that as the issue in terms of us stopping. Money is, the banks have been much more cautious in the last 3 to 5 years, well, since 2009. I don't think there's over-lending. I don't think it's crazy right now. I don't see us, there's a lot of demand. We put up a property for sale. We're getting a lot of action right now, and we're getting it, it's more North American, I think, right now than it is, say, from Brazil or Venezuela and other places. Certainly Europe is not coming the way they were, unless it's flight capital. But I think Miami is peaked out. I think it's going to kind of go sideways at this moment.
Ed?
I mean, interest rates, they're just so low. Even if they went up another 2-3 points, it's still at historic lows. And so I don't think that's going to have anything to do with the market. The banks are lending now. It's, I'm getting calls every day, here's money, go buy something. So I don't think the change in interest rates, which I think they're going to do maybe another 0.5 point before the end of the year, and then maybe go up a little, maybe another point next year. I don't think that's going to change the market at all.
And very quickly.
I find that there's so much cash around, and people are just looking for a vehicle to invest the cash. That concern about interest rate doesn't seem to be a problem right now, at least not for the type of buyers that I'm working at. And there's a lot of flight capital, and there's money waiting to be placed in a safe place, whether it's a 10-year window, a 15-year window, or the next 3 to 5 years.
The last question that I have is, how do you see the election coming affecting our market? I knew you knew it was going to be asked. Somebody had to talk about it.
He's talking about the election of our new president.
Well, I think your election is going to be really great, and you're following a terrific leader in Maria.
Because this is interesting. For me, it's very interesting. We don't know what's going to happen. This is one of the biggest challenges that we have in times. We don't know.
But we have this discussion every election. What's going to happen? What's going to happen? You know what? I don't think it's going to change very much. You know, we do have a government that has a Congress and House of Representatives, and so, you know, one person's not going to make that big of a change, in my opinion.
Ron? John?
I don't agree with that. I'm a Republican, but I got to tell you, George W. Bush made a big difference being president. He came in with a surplus and went out with one of the biggest crises we've ever had in the financial world and entered a war in Iraq. It was a disaster. So one man can make a difference, and not for the good. I'd rather go with a known entity.
Sandra, very quickly also, very quickly, because I want to open it to discussion.
Well, I'm a Bernie Sanders gal. I have to tell you that for now, but I can easily
you
convert.
You feel the burn.
I feel the burn, but I can also convert to Hillary. So that's, but you know, put your money in a safe investment. Who was it that was talking about that? I think it was Maria, that if you have a stable investment in a good location and it's throwing off an attractive yield to you, put your money in that, and in a stable neighborhood and an environment, and everything else will fall into place.
Ron?
Yeah, I do want to add something. Sandra's 100% right. Bet on Miami. It doesn't matter what short term is. Long term, Miami is a place to be. You go around the world, you don't have to say you're American. You can say you're from Miami. And everybody knows it. This is a place to be.
On that note, we were in MIPIM, which is in Coan, France, with Maria and some group from the Miami Association of Realtors and NAR. And I tell you, we're a cool place. Everybody wants to be here. Right. My wife was asking me today, are we New York? I said, no, we're Miami. We're even better than New York, man.
Right.
So, having said that, any questions that you have? I see a question back there. That question is to Ed, directly.
An economist for NAI has said that he thinks it's going to be probably end of 2019, 2020. I think probably more towards 2019, especially Miami. Miami's usually the first one in and the first one out. So I think probably another 3.5 years.
Any other questions? Right there. Sea level rise.
What?
Nobody talk about sea level rise.
Florida has been playing with the water flow since the 1880s when they tried to drain the Everglades. This is going to be a massive plumbing problem and a massive plumbing situation, and I believe we'll solve it. And I believe that they're going to try to restore the flow of the Everglades so that it flows south instead of diverting it at Lake Okeechobee to east and west. But that's part of the answer, because most people have a vision that you're going to have waves that are just coming over Miami Beach or something like this. It's coming up. I owned a property that on Northeast 2nd Avenue, about a block from the bay. My problem was never flooding from the bay. My problem was the water was coming up on heavy rains. And so we have water 10 feet below us. And we need to fix the flow of water first from the Everglades, and also we're going to harden buildings, raise buildings. We're going to have to build all kinds of dikes. We're going to do all kinds of things. And I think you have a fairly progressive leadership here. There are a lot of people who are sensitive to that.
We have another question back there. And that's it.
I do think that's really well said. But what I just want to full circle is we are going to get you more information on this. So that the main thing is if you get asked those kind of questions, you have an answer. You just don't say, I don't know what is the association doing, what is your municipality. There are things being done, there are current things being done, and there are things that can be done to mitigate these things. We want to argue with that knowledge so that that's not something that's going to not be a deal with.
Well, we have one question back there, and
Are you talking about buying existing properties and cash flows, and is that what you're asking?
Compared to speculative land. Is he paying cash? I mean, you can be speculative. If you have the cash and you can hold on, buying land, you can make a very nice profit over, a long period of time. My philosophy is to always buy something that has some sort of cash flow, so you have, until the market does change.
I have bought land as part of my investments, but land has the biggest swing down when it turns down and the biggest swing up when it turns up. So it can be very risky. It's like buying gold. It doesn't pay anything while you're holding it. That's why my business is, I've never developed anything out of the ground. My business has always been buying existing buildings and repurposing them and building them from there.
Sandra?
The other caveat with buying land is, of course, the most important thing as far as I'm concerned, is to make sure you have an environmental phase 1 and, if necessary, a phase 2. Because that piece of land that may have looked like a bargain in the beginning could cost you hundreds of thousands of dollars to clean up a perceived or a real contamination. That, in addition to making sure that it's within the urban development boundary and that it does have underlying zoning so that it can have upside value over a period of time, are really important criteria.
With that, Sandra, Ed, and Ron, I can thank you very much.